We see this across Europe. I think there has been some pressure on companies that have a relatively high asset gearing, as we call it, so the companies that are larger investors. The rising interest rates in the short term raise some questions on the attractiveness of investment propositions. So indeed, we have seen some differences. Also, the European growth, also actually for this year, is expected to be a bit lower than for example, in the US, where people are a bit more optimistic on a soft landing. So I think there's multiple factors that play a role here, but we're very focused on consistently delivering on our results. And I think with the strong operating capital generation that we have shown, the strong balance sheet, and that we also are able to translate into dividend and share buybacks, we have increased our targets. We used to have a target of 1.8 billion. We have now increased it to 1.9 billion in terms of operating capital generation. And that also translates into cash, because we also set a target of free cash flow of 1.6 billion in 2025. So I believe these combinations make it a very attractive proposition. And that's what we're focused on.
No, fair enough. Look, Karen and I have been so well behaved. We've gone straight into your investor relations page and we're reading through everything you've said there as well, including, and I like this line, I'm very interested, this is you, but I'm quoting here, a solid performance despite volatile macroeconomic and geopolitical environment. Can I play with that sentence and say solid performance because of the volatile macroeconomic and geopolitical environment? I.e., I think insurers are doing rather well in upping premiums, as indeed is the rest of the elsewhere and ancillary sectors, because of the volatile environment. Is that fair, David?
Well, I mean, the volatility obviously plays a role, but I think it's I wouldn't summarize it like that, because I would summarize it that, what we do is we serve underlying needs of customers. And in our European business, this is mostly protection. Now, if you think about, what type of protection people needed, and of course we operate also in Central and Eastern Europe, and there is a big underpenetration of protection. So that means that people increasingly have become concerned, maybe also during COVID, of how well am I protected if somebody in my family becomes sick, cannot work, or even passes away. And I think the underlying need for protection products is very strong, and I think that has been driving underlying our business. In terms of volatility of capital markets, we don't take an interest rate position. We're very cash flow matched. That means that, and that's why we also have this stable balance sheet. So either, if rates go up or down, we're not so sensitive to that, and that's also not the way we operate the company. We're really focused on the underlying need for customers, and that continues to be a positive trend, given the need for protection and the need for also a non-life and property and casualty products.